Hello everybody and welcome to the weekend update. So let's take a look and see what we've got coming up in today's video. Earnings. Our focus this week is going to be on retail. Lots of big retail reporting earnings this week, so we'll definitely be taking a look at that in this upcoming video. On the macro front, we have PPI and retail sales. Are some of the more important economic reports this week. We've also got markets. What a week it's been. Crazy week in the markets, between the election and the awesome CPI and the giant rally we had off of that. Lots to look at there. We're going to take a look at the dollar and its failed breakout from a bull flag. You know what they say about from failed moves comes fast moves, right? And we're seeing that in the dollar. So we'll take a look at that. Let's kind of take a look at some breadth. It's improving. We should take a quick look there and see what's going on. Also, we're going to take a look, we'll dive deep into the markets as we always do. See where we're going to go next. We're going to look for some setups, a couple of interesting setups. PayPal is one of them, and another one is Monster. But, with the big move in the markets that we've had, just like when we get a giant move down, when we get a giant move up, markets need some time to kind of set up again. So we're a little bit weak on setups for today, but there are a couple of nice ones. All right, so let's get right into it. Before we move ahead and get rid of my ugly face, we'll go ahead and smash that like button, and like magic, when you hit that button, my face will disappear and we can move on. All right, so everything we do here is for educational purposes only. We are not investment advisors, do not provide investment advice. All trading and decisions are your own and done at your own risk. All right, so earnings this week. Things are kind of winding down, but like I said, lots of big retail this week. Starting on Tuesday morning with Walmart, and then we've got Home Depot, and then C Limited is a name that we used to watch closely in the Discord. Probably not so much anymore. But still might be interesting to see what's going on here. Maybe take another look at that company, after their earnings report and see if it may be time to get back in. That's definitely not a recommendation. I haven't even looked at the chart of this one in ages, but I will be taking a look and see, how it responds to earnings. On Wednesday before the open, we've got Target and Lowe's. Those two will be closely watched. Lowe's is probably, Target's kind of will have already responded, probably had a move after Walmart reports, of course. And Lowe's doing the same thing after Home Depot reports. But, there's still room for movement. Even though they will react to those two earnings, these guys will react on their own as well. On Wednesday after the close, we have NVIDIA and also Cisco. Both of those will be closely watched. Maybe this Carmart one after Carvana's earnings. I'm not sure what the relationship there is. But anyway, on Thursday before the open, Alibaba will be very, very closely watched. I know I'll be watching it. I have a position in Baba. So I want to know what's going on there. And this will give us a hint. A lot of Chinese stocks are starting to report now. After the close on Thursday, Applied Materials. I'll look into the semis. You've got NVIDIA and Cisco, the day before, but we're watching Applied Materials as well. And then on Friday before the open, we have JD, another really big Chinese name. So that's our earning calendar for the week. Let's take a look and see what we've got on the macroeconomic calendar. And on Monday starting on Monday, we've got Fed speak all week long. They're not in their quiet period at the moment, and they're getting out there and talking too much, in my opinion. But that's kind of like what they like to do. So, they'll be talking a lot. On Tuesday, this is probably our most important number of the week, is PPI, the Producer Price Index, another inflation number, much like CPI. So fingers crossed that PPI backs up what we saw in CPI on Thursday. Also on Tuesday, the G20 meetings begin. And this apparently is Chinese President Xi's first trip outside of China for an international event. It would be really ironic if he got COVID there, wouldn't it? But maybe not. Probably not what we want to see. It'd probably just reinforce his belief that zero COVID is the right policy if he did. But seriously, though, Biden and Xi are supposed to meet at the G20 and have some talks face to face. Hopefully these two can kiss and make up, ease some of the tension that's going on there. And I think that, if we do get some positive news out of the G20, and specifically with Biden and Xi, we could definitely see the market rally on that. On Wednesday, we have retail sales numbers. This will be also very closely watched. Now, this is one of the ones that we really want to see that Goldilocks print. Of course, we want to see retail sales numbers come in good. It's good for the economy, right, when consumers are buying things, but not too good. We don't want consumers buying too many things because that is, of course, inflationary. On Thursday, we have the Philly Fed Manufacturing Index. And we have unemployment claims as always. And on Friday, which we can't really see, but anyway, on Friday we have existing home sales. And that kind of rounds out our week. All right, let's move on. Let's take a look at the markets. We will look at important indices. Or the major indices. We'll look at some breadth, some of the indicators in the indices that we like to watch. We'll look at some important commodities. There has been some movement in commodities over the last week. We'll look at sectors, of course, and we'll take a look at our setups towards the end of the show. All right, let's move on then and take a look. Let's start with the S&P 500. So, okay. You can see that obviously on Thursday we had a huge gap up and we continued to run. We were not having a great week and we were quite red on the week, by the end of Wednesday. After gapping down a little bit and then just selling off through the day on Wednesday. Wasn't looking good. And then, of course, the CPI number missed. Came in light. That miss to me is a beat of expectations. We were all expecting it to come in hot yet again, and it came in light, and down a fair ways. And of course, the market just took off. A giant gap up, rallied all day long. And then we had follow through yesterday. Mostly. Follow through in the SPY, follow through in the Qs. But there are some areas where, it wasn't so good, which, it shouldn't surprise us that we see some profit taking, or saw some profit taking on Friday coming into the weekend. After a giant move up, we are in a bear market still. Although the bear is definitely weakening, and I am becoming more and more confident. And I've said for a couple of weeks that I think the bottom is in. I'm becoming more and more confident the bottom really is in. Look at this chart, right? We have now, after making what is essentially a double bottom or a head and shoulders bottom, we had that the previous CPI print, which was bad, and yet we managed to rally on that. And we've kind of rallied ever since. We've had a bit of a pullback. We put in a higher low, and that higher low now is confirmed by this high, by this breakthrough of resistance. And look how strongly we broke through resistance here. And this was a major resistance level. We had the 100-day moving average there, and moved right on up into, and we are now coming into resistance. We've seen a pullback from this 407 to 410 level. We've seen a pullback from there before. We've got the target there of our head and shoulders bottom. We've got a bit of a gap fill to do there. So yeah, it's gonna be a tough go coming into this area. We've also got the declining 200-day moving average here. I think the best thing that we can do now is maybe move into this zone and then go sideways. If we can move into this zone, go sideways and not pull back hard, that would be very healthy. I think that would, people would take notice of that, especially if we went sideways for a couple of days and then moved up. Now, of course, on Tuesday we've got that PPI, right? So it's a bit of a wild card. We may, if that number comes in, pleasing to the market, we just may sail right on through all of this stuff. So we'll be watching that. These big macroeconomic events can overwhelm the technicals and really change things on the charts. So that is the S&P 500. Let's take a look at the Qs. The Qs, not as strong as the S&P 500, obviously, but making a nice move and a higher high, and the higher low confirmed by this high and breaking through this level right here. In fact, actually, let's draw that in. I'll draw that in off of this right here. Because this is a fairly important level, and this would be really nice if we could stay above this. Even if there's a little pullback, but one more day up, maybe get up to the 100, somewhere in this neighborhood, and start going sideways, kind of like same sort of thing I said with the SPY. IWM concerns me a little bit. IWM, the Russell 2000 small caps have been outperforming. As you can see on this chart, right, it's clearly outperforming. But they had kind of, some early profit taking and not the best looking candle there as it comes into strong resistance. The area that it pulled back from before. Not exactly what we want to see there. However, it has closed above its declining 200-day moving average. So really good to see that. Also, we had this one-day poke below this uptrend and then rallied strongly off of that. Reversed that and rallied strongly. So, this candle isn't the end of the world yet. It would have been nice to see more strength out of here. The areas that we've been seeing strength are the areas that were the weakest. It's great to see technology rallying, see strength there, but I think it would be nice if we can see these Russell small caps, the index that was leading and the sectors that were leading. We want to see those continue to lead, and at the same time have some recovery in those mega caps and technology stocks. Let's take a look at the volatility index. So this, obviously, big move down, and we have been seeing this come down for pretty much a month now, right? It went like 3 weeks to the downside before, a couple of up days in the VIX, and then hit that downtrend line, hit a bunch of moving averages, and rolled right over, pulled back sharply. We haven't seen, the 22 handle in VIX since early September. So a couple of months. So that's nice to see. Really want to see more continued downside. Want to see this gap fill. And then let's start moving below 20 here. If we can start moving below 20, it's going to be game on for equities. All right, the 10-year yield. Now that had on Thursday, its biggest down day apparently in a decade. This is a giant red candle here. Really big down day, exactly what we need to see because, as you know, right, when yields are going up, equities are not going to do well. Now, the bond market was closed on Friday, so unfortunately we didn't, we don't get to see if we follow through to the downside or not. Won't know that until tomorrow, until Monday. But we've got this 50-day moving average here, and we're kind of sitting right on it right now. So that is, potential support. But I kind of suspect, unless something happens, has happened over the weekend macro-wise that I'm unaware of so far, we should continue to see further downside here. Let's go over to TradingView, and let me bring this in here. Sorry, and there we go. Here we are. Okay, so this is the dollar index. Two really big days down. Apparently, Thursday was not only the largest down day in a decade in bonds, but also in the dollar index. You can see that we had been trying to break through a support level. We'd had a bit of a bottom, double bottom going on there, and it's really nice to see it break down through those. Now, if we zoom out a little bit, you can see how mature, this uptrend was. So we had the uptrend in the dollar index since February of this year. Broke that uptrend. And you can see that we had this consolidation, could certainly call that a bull flag, and we broke out to the downside of that. That's not supposed to happen. So that's what I say, but from failed moves comes fast moves, right? Because that should have broken to the upside. I think we will see more downside here. I think we're coming into, and should probably draw in some support areas here. Coming into an area of support, round about, where was that I was looking at? Kind of in around here, I guess, right about there maybe. Should see, well, let's get that up a little farther. That's better there. Okay, probably see some support here. That's in the 105 area. We've got the 200-day moving average just below that. So I think we've got a little bit more downside, and it potentially supports there. Maybe if it breaks through there, this is another area we should watch down in here in the 103. Either way, this move that we've seen, not only in the last 2 days, but the last week and a half or so, exactly what we need to see out of this dollar index. So that is very welcome. Okay, while we're here, as you can see, crypto is declining as I record this. Everybody knows what's happened in crypto. It's great that the equity market has been able to rally and really kind of shake this off, while crypto has been a disaster. That's really nice to see. It's horrible what's going on in crypto, and this could take years and years for crypto to recover from. I think there's been a complete loss of confidence now. Where we find support in this, I'm really not sure. And I'm very quickly myself losing interest in crypto. There will be a comeback of sorts, I'm sure, at some point in time. But there's also probably some more shoes to drop here. There's going to be more trouble comes out of this space. So maybe crypto is the new pot, and the same goes for for the some of the publicly listed crypto companies. But that's a discussion for another time, I think. Not ready to really kind of look there yet. Let's take a look at let's take a look at our DCA timing tool and see where we are with that. Let's start with the IWM, the Russell Small Caps. Of course, that one is still green. Let's take a look at SPY and see if that managed to go green. Look at that. Yes. This has managed to go full on green now. The MACD has crossed above the signal line and done it quite strongly. We have crossed above the 20-week moving average. So If you are waiting for this signal to restart your dollar cost averaging, it's all systems go. I think we'll see much the same thing when we look at the Qs. We're still kind of half and half here. We do have a crossover. The MACD is crossed above the signal line, but price has not quite crossed above the 20-week moving average. This is close enough in my book to turn the dollar cost averaging on in the Qs as well, if you're so inclined. Okay, what do we got? Oh, we want to look at some breadth, don't we? Let's go. Let's go here. All right, so this is some of the stocks above their 50-week moving average, and you can see that that has been climbing nicely since putting in an extreme low back towards the end of September. Has continued to rise nicely, and we are now looking at 71% of stocks are above the 50-day moving average. We haven't seen this level since back in early August, and the high we made in early August or mid-August. Sorry. Now that's great news. But how are we doing on the more important breadth metric here? Is the stocks above their 200-day moving average. And what's really interesting here, okay, notice the double bottom we've put into this now. That double bottom is confirmed because this has now moved above that mid-August level, mid-August high. So, if we go back to SPY really quick, you can see the SPY, price has not yet moved above that mid-August high. A long way off it, actually. And nor have we moved above the 200-day moving average. However, going back to here, you can see that the number of stocks above the 200-day moving average is above that August high. And approaching levels we haven't seen since early in the year. This is very bullish in my opinion. It takes a lot of work to get these stocks back above, especially from being down at 16%. It takes a lot of work to get these stocks back, moving like this. So really good to see. However, it's still only 44% of stocks are above their 200-day moving average. So there is still a lot of work to do. But this is a very good sign in my opinion, and it's these breadth metrics, and if you want to go and dive in deeper to some on your own, I think that you'll be more and more convinced that the bottom is in. All right, let's move on to gold. Gold has had a fantastic week and a half, really strong move here. You can see a ticker talk on Wednesday. I talked about how so this is Wednesday right here. I thought, if this can put in a little bull flag here, this will be great. It'll give us a pattern. It'll give us a setup that we can use to jump in. Because I was saying, look, we've got it stopped today, and again, this was on Wednesday. I was saying it stopped on Wednesday at the 100-day moving average, and it really looked like it might consolidate under there for a couple of days. It didn't. It had a one-day consolidation, and then it broke out of that really strongly, of course, on Thursday and continued on Friday. So that wasn't playable in my opinion, and you know what? There were much better places to put your money in for the move that happened on Thursday morning. So what happens next? We can see some slowing momentum here. Same again, do we consolidate maybe above this minor resistance level, or do we continue up and get up to this, near 1800 level, consolidate under there? Again, if it did that, if it moved up in here and went sideways for a few days or a week or two, definitely that would be a nice setup for a play. The miner's not that interesting. Silver, not that interesting. Copper. Copper is interesting. Again, talked about how it would be really nice to see a consolidation here for a number of days, and that didn't really happen. It just kind of went and broke out. Not sure what happens next. We've got this declining 200-day moving average. But you can bet that, with the G20 on Tuesday, Biden and Xi meeting, if good things come out of that meeting, copper is one of the commodities that will react strongly to that. Same goes if there's negativity coming out of that meeting. We should see copper decline. But if things are positive coming out of the meeting, it should be good for the Chinese economy, and which will be good for copper. Because copper is a major industrial input, and especially in China. Okay, so we'll take a look at Freeport-McMoRan, one of our favorite copper stocks. That had a little bit of a shooting star here after a big gap up. It's got that selling wick, not the most bullish looking candle there. However, COPX, the Copper Miners ETF, that one looks better, although did stall at the 200-day moving average. So lots of interesting stuff going on in this space. Unfortunately, since this pennant formation, really no setups. It's really, really kind of hard to get in here. I mean, you get a pullback for a day and then it gaps up, right? Copper's been a really, really difficult one to try and get in. I'm still not in it, even though I really want to be. Our general commodities index. Looking messy, kind of, leaving gaps all over the place, but moving away from its trend line, but looking a little indecisive. I'm not sure what to make of that one. Let's move on to oil. So oil is still kind of grinding sideways, has gotten a little more volatile recently. But after a few days of pullback, it looks like it wants to go higher from here. We've got, a nice support level under here now. And still waiting for this head and shoulders bottom to play out. It hasn't really kind of started playing out yet. Natural gas. Natural gas continues to be quite volatile. You can see we had a breakout from this, little pennant or triangle formation, symmetrical triangle formation that popped up nicely out of there and immediately pulled back, and we've kind of gone back into it. And I suppose now we should get rid of that one. And it's really kind of, maybe ever so slightly ascending triangle, but to me this kind of looks more like a sideways consolidation. You could say building a base and, with the failed breakout there, but it hasn't broken out to the downside yet. XLE, our oil sector ETF. This got really volatile and popped right back up again, and here we are, right back into all-time highs. It really looks like it wants to go through this time. Same goes for XOP. It's not at all-time highs though, but it's got a similar pattern. With the nice move up, failed in the gap, hit the 21-day moving average, and popped right back up again, and looks ready to go attack. OIH, the Oil Services ETF, that is at its all-time highs. A little bit of a peekaboo there, prairie dog maybe, through that all-time high and pulled back in a little bit. TAN, the solar ETF, had a huge day on Thursday, but you can see, through the week was quite volatile. Had this nice move up on Wednesday and then pulled right back, gave it all back, gapped way up on Thursday. Friday gave a bunch of that back. TAN is kind of doing what TAN does. The solars are doing what they do, and that is being really volatile. Tough to play in this space, but can be really lucrative when you get it right. XLY, consumer discretionary, was looking ugly, nasty week and a half or so it had. into Wednesday and then broke down through this pivot level. It was not looking good for consumer discretionary. There was going to be a lot more downside if it broke through that level. It could easily have come down all the way to, say, to 120. It could have come down from 130 to 120 fairly quickly. But it managed to recover itself. It got saved by that CPI data and has made a nice move up. I think we can get rid of this line here, draw in maybe some more sort of horizontal. Well, actually, let's get this trend line. Obviously, you could move your downtrend to here and now maybe up to there. For now, I think we'll just leave it like this. But we should be looking at some resistance overhead. Yeah, probably about that level there. Where was I here? Yeah, I think that I like that right there. There we go. Potential resistance overhead. Maybe this needs to just consolidate sideways some more. But it being consumer discretionary, obviously retail is a big part of this. And we have a lot of retail, really important retail earnings this week, and that retail sales report. That could send this, breaking out right through the top of this, or it could send us right back to test the lows again. All right, XLI Industrials. So look at this. We are right into the August highs. If you're ever wondering what relative strength looks like, this is it, right? This big move down puts in a double bottom, or you might want to call that a rounding bottom. You might even want to call it a big V. I think it's actually more of a U. But right back up again, right into that. Now that's, probably going to be major resistance. Do we break through that right now, or do we have to consolidate first or pull back a little bit? I'm not so sure. But the big lesson here is that this is what relative strength looks like. Look at these August highs on other charts. For instance, when we, we'll go back and look at that on SPY, right? There's that August high. Look how far away from that we are. Even in IWM, the Russell Small Caps. Here's that August high. We're a ways from it. We go back into XLI. And, I've been talking about XLI for a while. I just haven't been able to find any good plays in here. It's hard to find individual names that are setting up in there. But the ETF itself has been fantastic. So here we are, right up into those August highs. There's your relative strength. And this is the really easy way to look at relative strength, right? All right, let's look at financials. We're going to see much the same thing here in financials. Here's your August high. Let's get that drawn in. Okay. We'll just call it a pivot for now. But there you are, right into that August high. Relative strength right there. Does this continue higher? It kind of looks like it wants to, but maybe it needs to move sideways a little bit. This trend line is pretty steep, though. That's a little bit concerning. Let's see. Technology. Technology was, quite strong. Like I said, these were some of the stocks that did best on Thursday were tech stocks. The Qs outperformed the other indices on Thursday. And you can certainly see that here in this chart. It's been a really nice move off these scary lows. This technology sector was looking very, very weak for a while. But it's at least in the last couple of days, has really good relative strength. It's managed to move up above the 100-day moving average. We will have some resistance overhead, though. So we'll watch out here. And, nothing wrong with this starting to consolidate and going sideways. Maybe one more day up and then go sideways for a bit before moving higher again. Let's look at the communications sector. This has been one of the weakest charts of all. It's miles away from its August high, but it is coming off the lows. this is good, but I don't really see strength continuing too much in here. I really think that this needs to just go sideways and build a real base in here for a while, and that's what's going to happen. Now, whether it happens between, say, the 48 and 51 level, or if we get a wider consolidation, I suspect probably wider, probably 48 to 52, and it could go on for months. So I really, even though we saw tech really rally and come back, and a lot of our FAANG stocks rally and come back nicely, I still think there's an awful lot of recovery that needs to be done there, and I don't think that that's the place to be right now. Sure, it would have worked really well for you on Thursday, but I think going forward, other sectors are going to lead the way. All right, let's take a look at some of those FAANG stocks. Meta, if you had, you hear me always talking about not catching a falling knife or anything, but if you had found a way to get in Meta, down in this area, kudos to you. Because what were our lows here? In around 90, and within a week, up to as much as 115. Really nice move. Really nice move. And even if you'd only caught half of that would have been a really nice move. But where does this go from here? So this is what, a 30% move in a week and a day or two. Let's take a look here. So off that low to the close, 28%. To the high was 30%. That's a really big move. If we should put a Fibonacci on that, see what Mr. Fibonacci has to say about that move. So, it wouldn't be at all surprising to see a pullback, and even a pullback to the 50%. That's not going to look like much on this chart, but it's going to be a big pullback. And that would be perfectly logical to get us right to that gap. I should draw that gap in there as well. And speaking of Fibonacci's, I don't use them much, but I really do like using them for the that 50% level is so important. We see that come into play so often. And it wouldn't surprise me. Here, let me delete this one off here for a sec. Wouldn't surprise me if this move here is 50% of this decline from here. So let's draw that on there. Look at that. Yeah. That 50%, even though that's not actually a Fibonacci number, it's the one that works most. So anyway, speaking of Fibonacci's, on Wednesday, there won't be a ticker talk on Wednesday, but we will be doing a little educational session, and I'm going to be doing a bit of a half and half. Half of the session is going to be on Fibonacci's, and half of the session is going to be on Bollinger Bands. So we'll be going into this in a lot more depth, but it's really interesting to see how this so often works out. Now that I know this is at the 50% level where this stalled out, I'm really now expecting this to roll over a bit. So let's get that other fib in here from that low to that high again, so we can see where do we expect to come down to. Our target on a retracement is going to be down in here at about 101.50, right at the top of that gap. So it'll be interesting to watch that over the next few days. If you are in Meta, you want to be really careful if this starts to pull back here. And it might be time, even if this does move up a little bit more, say it moves up to the 618 retracement here, that's the 120 level, 119, 120, great place to take some profit. All right, let's look at Apple. So Apple had, gotten really ugly here. COVID in their biggest, the biggest Apple factory in the world, sent this declining down to this October low. Thankfully, it bounced there so that we don't have to come down and test this June low. Got a really nice bounce off of that, and right through a bunch of moving averages as well, which is really nice to see. Really nice to see it get up through. We're sitting right at 150, right? Which is, important psychological level. It would be really nice if it went up through there, another day or two to the upside, consolidated somewhere up in here. Not sure that we'll get that. We may see consolidation down at the bottom of this area, which isn't as nice. But anyway, really, really good to see this move out of Apple. Amazon. So you can see that Amazon has come right into a resistance level, and I bet you that's going to be a 50% retracement of its last down move. Let's check that one. Pretty close. So yeah, we should expect to see, slowing momentum coming into here. We've also got, these pivots up here, which are right around that 50% retracement. Wouldn't surprise me to see this either roll over a little bit or go sideways. So if these roll over a little bit, it's going to be really important that they stay above here, right? And then turn back up. I'm okay with it pulling back a little bit, just as long as it's a shallow pullback and then it turns up, because then it gives us, a high to work off of, right? Which and a low, and those are the beginning of uptrends, right? But there's a lot of work to do here as well, and it wouldn't surprise me one bit if we see a lot of sideways consolidation, months, quarters maybe, of sideways consolidation before this really does anything. All right, let's take a look at Netflix. This is, of all the FAANG stocks, the one that's performing the best. We've been talking a ton about this. We were looking at this. We were looking at the top of the gap for support. That failed. Came down to the bottom of the gap, and it tagged that perfectly. I thought this, I wasn't convinced about this hammer candle here, especially with everything else that was going on in markets. And I thought that a test of either the 50-day moving average or, the bottom of the big gap was in the cards for this. And so I didn't trust any of this, unfortunately. And when this gapped up on Thursday, I was playing other stuff, and I wasn't paying attention to it. But anybody who got in there is certainly being rewarded right now. And this is one that I think can go higher. We've got to watch out for this pivot, though. That pair of highs right there. It looks like we're going to move into that. What happens next? Do we move sideways from there, or do we just go right back up and finish closing this gap? I would, if I had a position in this, I would be certainly taking some profit off as we come into this 305 to 305.50 area, and then take a wait and see. Maybe put it back on. Maybe if it rolls down here, pull it back on as it breaks out through there. Certainly you want to be taking a bunch of profit off as we come in to close this gap. This is the level everybody's watching for, and I think it's going to be really tough. It may not even get there for a while. It may even take a couple of tries to even tag that. Because everybody's aware of this level. Everybody's watching it, and everybody's planning to take their profits there. Okay, let's look at Google. Some interesting price action in Google. Really nice sort of V-shaped recovery off this move. We should get a fib onto this one too and see where that 50. I think this one went through its 50% retracement. Yes, it did. And look at that. It went right to the 618. Also where that gap is. And the bottom of this, the former consolidation that this fell out of. So what happens now? I think this, like a lot of these, has got to kind of pull back, and maybe it pulls back to the 382 consolidation, which is right where that candle is. Also, this gap here, maybe I should draw that gap in. That gap there. This is really interesting. Even if you have no interest in playing this, watch how this plays out over the next few days. Draw some of this stuff on your chart, right? Because there's a lot of levels here that could potentially come into play. Maybe this jumps right up into this former consolidation, closes this gap, and then, we see this consolidate again for a while. And again, I think, Google is another one that probably needs to consolidate for a couple of months or maybe a couple of quarters. And I think that would be healthy for it. Let's let some other spaces have some fun for a while, before we all go jumping back into these FAANGs. Microsoft. Did I already talk about this one? Oh, okay. Same sort of stuff going on. Microsoft, the recovery here was quite a bit stronger, though, than some of the others. We've already basically closed this gap, so let me get rid of that gap. But we are coming into resistance. But it's good to see, this got back quickly to that October high, which is also on this one, the beginning of October here in this pivot. So nice move, nice recovery. Again, probably needs to go sideways and consolidate for a little bit before this continues higher. Tesla, things not looking quite so good there. It did have a nice move on Thursday, Friday. It gapped up big time. It did pull back and then went back up from the looks of things. Does that jive with the intraday price action? That candle looks suspect. We want to see Thursday's candle. Oh yeah, okay, yeah, that's right. I remember now. It did, did really well in the pre-market and then pulled back really hard before bouncing really strongly on Thursday. Okay, yeah, that candle, that daily candle there makes sense now. Okay. On Friday, had a bit of a gap down, but then recovered nicely again. So obviously this 186-ish level is proving it's important, as is 180 and that former gap that goes way back. Needs to see continued follow through here, at least up into the 206 area. I want to see this get through 200 quickly, like on Monday. If this stalls out of the 206, that's fine, and then goes sideways from there, that's fine. Stalling at 200, not so good. It probably rolls over. Semiconductors. This is where we see, out of all the technology, this is where we saw the most strength on Thursday. Huge move up. I think this move was, what was it, 28%, I believe it was. Let me get my little ruler out here. So from the close to the close, oh, that was only, 10%. Where did I get 20%, 28%? Oh, you know what? There's 28% must be from there to there. Nonetheless, in 2 days, this move was about 14%. And yeah, I think from down here, that's 22, must have been 28% from there. Okay, anyway. However you slice this, really nice move, a really strong move out of this ascending channel. But right into resistance right now. Let's zoom out a little bit and take a look at where does this downtrend come from. So this downtrend starts back in January of this year. And you can see it has been pretty well behaved off that downtrend, through the year, and we're right there again, and we've got some resistance here. I think the best case scenario on this, we've had a really big move. Let's go sideways for a few days. Let's consolidate this a little bit. Maybe even more than a few days, maybe a week or two. If we go sideways in this area, that would be really strong in my book. Even if we had, we could have another up day, come up, tag this 200-day moving average, go sideways from there. But if there's a nice consolidation in here, if it draws a nice bull flag, the ideal thing would be come up to this 200-day moving average, draw a bull flag for a week or two that looks something like that. I would be so all over buying a breakout from that. That would be a sweet little setup. Now, speaking of setups, I've been talking for quite a while about this setup in AMD. We had this base on base, and it really wasn't breaking out. Well, it gapped up. It gapped up on Thursday, of course, with everything else. And you really had to kind of like, bite your tongue and buy that gap if you wanted to play it. But if you did, if you chased this gap, you were rewarded nicely for this. Now we're coming into some resistance. Wouldn't surprise me one bit. See this again, probably set up a bull flag, and this is a beautiful place for it to set up a bull flag. It could do that. The bull flag could, what if it set up, look at that trend line I've got there. What if it set up something like that? Using, the upper part of the bull flag with that as that trend line, and the lower part, being parallel to the trend line, of course. That would be a sweet setup. AMD has a very similar trend line to what we saw in semiconductors. And you can see I'm cutting through price here because I just like this trend line worked so well. I don't mind cutting through this little area here. Now, we also have to pay attention to that. But it really looks like this is going to find some resistance under that trend line. So again, AMD, definitely one to keep an eye on. Okay. All right, let's move over to healthcare. Now you can see that healthcare, another one of the outperforming sectors. It was, I believe, the first one to come up and tag that August high. So really good relative strength here. Tagged that August high, pulled back a little bit, came up, tagged this major major resistance again, tried to get through and pulled the prairie dog and pulled back. However, it got thrown back quite a bit, but trying to bounce again. It looks like we are definitely going to break through here, but I just think what's going to be better than making a big move and trying to get through, what's better is just going sideways. Let's put a nice little consolidation, nice and tight in here. That gives us a little breakout to buy, and then it can move higher, and we can start looking at some of these pivots up here. So that's our healthcare sector. Let's take a look at XBI, which is biotech. This is starting to look interesting too. We've had this fairly tight ascending channel on this. After that head and shoulders kind of top pattern there, and it looks like maybe we keep coming up into it, right? The top of that channel, which is also the neckline from the head and shoulders, coming up in there and getting thrown back from it. It looked like this move there would have, it was a sideways consolidation. It looked like maybe that had a chance to break through, but it couldn't do it. I don't know. I have a feeling this time we can. I might be wrong on that. It's just gut feel. And considering everything that's going on in the market, I think that this time it's going to break out of here. I already have a position in IBB, which is sort of the alternate to this one. Actually, let's go look at that and see what it's doing. And you can see, it's coming up into the top of a consolidation, the top of a big base here, and resistance. And again, it's had a reasonable pace coming up in here. It's had a couple of candles. It kind of looks ready to go. So we may see really good things out of biotech in the next couple of days. Let's take a look at REITs. So REITs, big move up into this pivot and then a stall. Kind of expected coming into a level like that. It's REITs. I'm not the most interesting sector and not somewhere I really want to play right now. I want to be looking for more aggressive something. I want to be looking for nice setups in more aggressive sectors. Staples, again, should not be outperforming. These are defensives, right? We're not looking for these to outperform. We don't really care that this moves up to the 200-day moving average and stalls out. That's fine. It's defensive. And let's take a look at utilities. Same sort of idea here. It did have a nice gap up, but a little bit of a pullback on Friday. And you know what? I'm okay with that. I want money to be going to risk on stocks. All right. Couple of the holdings we were looking at, or setups that we were looking at last week. One of them was Schwab. We've been looking at this for a little while, right? We've got kind of a base on top of this support resistance level. And it just can't seem to do anything. And it had a weird day on Thursday. I just don't know what to make of this. So even if this did go and break out, I'm not sure I want to play it. Because it's just, I don't know, it's not behaving and it's not looking, I mean, it's outperforming the sector in that it's above its August highs. And it was one of the first, individual stocks to get there. But the sector, XLF, is doing better than this, isn't it? Or I think or at least had a couple of healthier days than what we're seeing in Schwab. So yeah, think of it what you will. I don't know. I'll still keep an eye on it though, because it is kind of a nice setup. PayPal, we've been watching this too. And I looked at this because of this nice hammer reversal candle in here, but it's just such a hard place to buy right down in here, right? For me anyway, because I don't like the falling knife thing. Other people have a lot easier time buying these, and kudos to you if you did buy that, because you've already got a nice move. Now, this little downtrend line or channel, we could draw, turn this into a channel. There we go. Channel on that would look, you could put it down here. I'd kind of like to tighten that up a little bit there. The breakout from this could be really good, except that it's made a really big move into here. It's already stretched. It's extended. Buying a breakout here is sketchy. However, if it does break out, it breaks out above the 200-day moving average. If it break out and held and kept going, it would be really big. I kind of think if it breaks out, it fails. I don't think it's quite ready yet. I think it breaks out, it pulls back in. Maybe it only comes down to the low of Friday and then starts to move up again. And maybe that's when you want to buy a breakout. So I think it's worth watching. But careful about chasing this one because it is really stretched. What else have we been looking at? Canadian Solar is one that came up in the ticker talk. We looked at this quite a bit. We talked about this consolidation and how you could, buy a breakout from that. And now it seems to be wanting to consolidate just above this resistance level. The breakout was maybe a little bit weak. So maybe this has got to put some time in consolidating up in this area before moving higher. But you definitely want to see this 36 level hold. And finally, Monster is another one that is looking pretty nice. Now, Monster just had earnings. It had this big gap up, this monster move. Sorry for the pun, couldn't resist. Monster move up, and it's consolidating up in here. It's not a tight flag, which is what we'd really want to see. Actually, we need to back up a little bit here and look at how important this level is. In fact, we need to go back for ages, forever, basically, to show you how important this level is. So this is basically all-time history on this stock. Everybody should know that this is the biggest performing stock. This stock has outperformed all other stocks. It's up, I can't remember what it is, 200,000% or something. But anyway, this level, these highs, massively important. As you can see, it's come up against that level so many times. We'll call that 1, 2. We'll call that 3, 4, 5 now. The more times you knock on the door, eventually they're going to let you in, right? So let's just pull that down a little bit. That looks better. Okay, good. So here we are. Came up there, consolidate under there, pulled back a little bit, made a big move up to it, couldn't get through. That's because it made a pretty big move. It expended a lot of energy doing that. What was this move here? From like 95 to $5, 5% move, but it's not how these things are broken. And then it got thrown back, built a nice base. It's moved up again into here pretty quickly, but it is going sideways. It's consolidating. It's wider than I'd like to see. But you don't always get perfection, and quite often if you do get for what looks like perfection, it doesn't really work out. So we're going to take a look at that, and pretty simple, right? This is not investment advice, by the way, but the way you play this is basically you buy the breakout. Now, whether you buy that above Friday's high, above Thursday's high, maybe you buy it above this high right here. But at some point you just got to bite the bullet and buy this breakout. And initially, your stop is probably below the consolidation, maybe below here, just into this gap. Unfortunately, kind of wide. In a perfect world, we see a tighter consolidation up in here. I'd love to see a consolidation that looked like this, high and tight. Those give you the best flags. Those give you the best chance of success. But this is a pretty decent flag, and it could give us a pretty decent move. If we look at the flag from down here, and this is a sort of what I'm drawing in here is a best case scenario move, and I certainly wouldn't be making any profit targets based on that. Maybe an ultimate target could be based on this, best case scenario move. Takes you up into about 116. More conservative way to do this would be to draw the flag from down in here somewhere, and then you can move that up to there. That gives you a move up to about 108. It's not a bad move. That's around 8% on the move, and that probably happens fairly quickly. If you did draw your looking for a target from way down there, you could even, as a conservative thing, move this down to the bottom of the consolidation, and that target's about 112. Either way, this is probably going to go quick when it breaks out of this consolidation. So anywhere from 108 up into 116. Or your target areas on that, and that's not a bad little move because it probably happens in 2 days to a week. That's the swing trade that I want to be involved in. Now, if you're looking to invest in this thing, because this has been a long-term consolidation in here, right? It's messy, but really you could draw sort of, have the base that looks like this in this area, and that takes you back into 2020, late 2020 as a base. And, when this stock has done that before, let me get the auto back on here. When this stock has, made these bases before, it has been responsible for really good moves. We had a similar looking base in here. And when we broke out of that, we went from 70 to 100. So what, around 40%? Not a bad move. So this is something that you could, if this goes, you could try and keep a piece of this on for a bigger move. So that's our setups. Thanks for sticking around to the end here. Let's move on to our calendar, see what we've got coming up in the Discord. Like I said earlier, we've got educational session happening on Wednesday starting at 7 p.m. Eastern. We'll be looking at Bollinger Bands and Fibonacci retracements. And then the next 2 weekends, of course, we have these weekend videos. And on Wednesdays, from the after our educational session, so the 23rd and 30th, we have Ticker Talk again. So I want to thank everybody for coming out. If you've been watching the video, go ahead, hit that like button. Don't forget to subscribe. Share it with your friends if you want. And enjoy the rest of the weekend. Thanks, everybody, and have a good night.